Hey, Jason here, and I wanted to shoot a video. It's been a minute. Give a life update, give a channel update, talk about the economy a bit, and what my predictions are for 2026, and how it looks for the rest of this year. I'll start by talking about the channel itself. You know I'm not posting as much. I do want to get back into more business content. We're going to be talking about business on this particular video, so I'm trying to make a commitment to filming more business content. I am done helping other people buy businesses in any professional capacity, so that is something that took place here. I finished my last of that in July. But there will be more business content. So if you have business questions, if you're looking to buy a business, you're operating, or you have finance questions, investing related questions, raising debt or equity or structuring deals, things of that nature, feel free to drop in the comments, and I'll do the best I can to help, try to make more videos to help you with that. That's number one. I will, however, on the channel and on social media in general, be making more aviation videos, which is why I felt it was appropriate to film here with the bird behind me. This girl gets me across the state of Florida on a regular basis. Flew back from Daytona Beach area last night over to Tampa, and it saves me about 3-4 hours a day every time I use that bird to get across the state. So I've really become passionate about aviation, so I'll be working some aviation content into the channel as well. So if you're not into that, that's cool. If you are into that, then we'll be having more of that as well. Talking about business, and firstly I'm going to speak about our business and my business, Bright Utilities, the investment group I founded back, this is 5 or 6 years ago now. Actually about the first week of 2020, so every bit of 5 years ago now. It's been an interesting year. Probably we'll definitely do the most in sales that we've ever done before. We do $1 million every single month. A bad month for us is $1 million a month. So, no matter how you slice it, we're an 8-figure business now. If you take our different acquisitions that we've made, and we've done 2 acquisitions in the last year and a half, and then we rebranded one of the acquisitions, which the rebrand itself has been almost like another acquisition because we had to redo licensing. We moved locations to a much larger facility, really big facility. Signed the biggest lease in my life. It's equivalent to like basically having a mansion as far as the lease size and what I signed on. So we rebranded that. That was Rosensteel's that converted into Brighter Home Services. You can Google Brighter Home Services. That's the new Tampa Bay home service company that was rebranded out of an acquisition we made last October. And then the prior company that we bought in March of last year, about a year and a half ago now, that's the company that I use the bird for to fly over. It's in near the Daytona Beach area. And we've had a lot of success with that business as far as expanding it into the commercial markets and then expanding its footprint, doing a whole bunch of commercial work that we do a lot of here in Tampa Bay. I'm filming out of Tampa, by the way, in the hangar here in Tampa, Florida. So it's been on one end a really exciting year as far as there's been a rebrand. We've been expanding our footprint for the business we bought a year and a half ago, the business we bought 6 months ago. It's really grown and expanded. We had all-time high sales numbers in that business. We were able to double sales compared to where we were at that time the year prior. But it's also been a difficult year, and it's interesting as well in that I think with the Trump administration, in the first few months of his administration where he was negotiating tariffs with all the different countries, we really had a hard time landing big work for our bigger commercial projects in the first half of the year. And now I filmed this for you in the last few days of September. We see more invitations to bid and more projects coming out now than we ever normally see this time in the year. Normally in our business, we get slammed from spring till about now, and normally at about this time we're slowing down. Whereas this year, we're about to get really busy as we go into the winter for our commercial work, which makes up about 60% of our total revenue right now between our different businesses. We're about to get slammed, which total opposite of what normally takes place. So whereas we had a much better summer for our commercial projects last summer, this winter, it looks like we're gonna have a much bigger winter than we ever had before. So it's kind of been a strange year operating wise, and we've taken some pretty big bets as far as growing our residential stuff with rebranding into Brighter Home Services. Again, you can Google Brighter Home Services. We're close to getting 100 reviews. We had no reviews only 3 months ago. So it's grown pretty quickly, and we've signed up hundreds of memberships in a short period of time. So it's been successful, but it's been a lot of growth. We've been able to avoid diluting any equity as we've continued to grow, which those of you who are operating and looking to grow businesses aggressively know that, to grow a company, you either have to take your profits and invest them back in, or you need to grow using debt or equity. Equity means you dilute your ownership. Debt obviously means you have to pay back in the future using with interest. And we've taken last year's profits and then have used some debt to fuel our growth. And it's been a bit of a challenge to maintain that exact same cap table as we've aggressively grown B&B, Howell across the state, as well as now Brighter Home Services. But it's been an exciting year to see the growth. And I think we're setting ourselves up next year where our goal is to do $2 million every month. And I think we can do it, which would put us at 24 for the year. And that's between the different companies. We have 3 operating companies under Brighter Utilities. There's been 5 direct acquisitions, but we've merged several of them. And you can learn more about all that at brighterutilities.com, by the way, if you're interested. But yeah, it's been an exciting year. I could talk more about Brighter Utilities and its different businesses if you like in a future video. But what I wanted to do, and excuse the helicopter coming in for landing over on the roadway. What I wanted to do though before I sign off on this video is I wanted to talk a little bit about what I predict for the next few months and then over the next year, both from just an economics perspective, an economy perspective, as well as from M&A, from a mergers and acquisitions perspective. First things first, we just had a 25 basis point rate cut, which means 0.25%. That was announced, I believe, on the 20th of September, so about a week ago, roughly speaking, at the time of recording this. It looks like that's going to continue. So we're finally seeing the capitulation from the Fed as far as rates cutting now. And so that is going to mean that your acquisition financing will be cheaper. And it looks like, we could have the prediction appears to be right now, perhaps 2 more rate cuts of 25 basis points, which means, in the last third of the year, we could have almost a full percent cheaper debt per se. We'll see. That's a bit of a prediction, but it looks like that could take place. And the reason that's looking like it's taking place is because the labor market is slowing down. And I've seen this firsthand, for years as an owner. People have been getting raises left and right, and deservedly so, because there hasn't been enough workforce. And it's felt like for the first time this year that's changed. And I think there's a little bit less demand out in the economy in general. I think that's part of the reason we've had a bit of a challenging year. While we've grown aggressively, it's been a bit of a challenging year to land as much work as we've needed. We've seen that in the residential AC space. We've seen that in the bigger commercial projects that we do. We've kind of seen that across the board with our different businesses, even other businesses I'm involved with. The mobile home park, for example. Those of you who've been following me for years now know that's where I got started, out in Nebraska. It's the first year ever we've actually had a bit of a hard time keeping full occupancy out there. When, assuming a unit is ready and not being renovated, it's the first year actually in 6 years plus of me running that it's been a bit more challenging to keep those units full. So demand has been a little bit down. I think that's why they're cutting rates now. But I will say, I think you're going to continue to see inflation naturally as rates go down. You're just, I think, going to see continued inflation. So be in assets, be in gold, be in Bitcoin, be in stocks. Don't be in cash. I think it's fair to say if you have excess cash, you want to be in investments, because our currency, the US dollar, continues to be debased, which means it has less power. So I think that's going to be a continued theme. I do think, however, and this is just a prediction, but I think next year will be a little bit easier to operate. If I had to make a prediction, I don't think Trump, I think his ego, frankly, is just too big to allow the economy to really stagnate. And he's basically taking the Federal Reserve and he's just grabbing it by the scruff of the neck. You see him constantly badgering Jerome Powell, and Jerome Powell's term expires here relatively soon in 2026. And I think he'll obviously be out, and somebody else new will be in. Somebody who's, I think, going to be more aligned with Trump as far as getting rates down. That's something Trump's really loud about. So I think you can expect rates to continue to come down next year. I think rates coming down will spike more CapEx, capital expenditure projects, more building. Companies can be a little bit more aggressive as far as buying more equipment or vehicles, or building facilities and things of that nature. You're also starting to see some of the initiatives that Trump is interested in coming to light from the federal government. I think you'll see a lot of that federal work come into the fold in 2026. But I think, with rates likely continuing to come down, I think it's fair to say that's going to happen. It's likely to happen, unless if the economy just really goes off a cliff. I think the other side of that is you're going to see multiples continue to be high. because asset prices continue to get driven up. Whether it's crypto or stocks and other assets, you continue to see assets raise in value, and that's what happens when you have a U.S. dollar that continues to be weakened. And I think rate cutting is only going to exacerbate that. And so I think that comes all the way down into small to mid-sized business acquisitions, whether it be a $1 million acquisition or a $15 million acquisition is, I think by and large, you're going to see that earnings multiples continue to go higher. Though it's also true that some of these private equity groups are hurting right now from some of the acquisitions they made back in 2020 and 2021 and 2022 when the money printer was just fully hammered and everyone had access to 0% money. We were in the ZIRP era, the 0% interest rate environment. And so some of those private equity groups, they're getting hurt and they don't want to admit they've been hurt by kind of recalibrating what their portfolio size is and what the value of that portfolio is. So, but the private equity groups are usually in the middle market, whereas, for those of us who are a little more scrappy and entrepreneurial and maybe not worth 8 or 9 figures, certainly the way I started, I was worth nothing, if you know my story and have watched over the years. So, for those of you that are kind of the smaller business acquisition types, I don't think private equity results are going to too much impact valuations for small to mid-sized businesses, but the cat is certainly out of the bag as far as small to mid-sized businesses. You got a lot of finance people and Wall Street types and MBAs that are really getting into the space, and when I was getting in 2019 and 2018 and then expanded in 2020 into Florida, it was not as common for the Wall Street types and the MBA types and the finance types to be getting into this. But the searcher model and being a self-funded searcher has really grown in popularity with the white collar folk. And so I think that is going to continue to mean that it's going to be tougher to find great businesses at 3 times earnings. That was always kind of the dream when I was getting involved, and still is the dream. I mean, I'd love to buy great businesses at 3 times earnings. And I unfortunately am here to report that I just don't think you're going to find that unless if you're going to a real small market out in the middle of nowhere, or if you're buying a real small business doing, not enough earnings really to be super interesting unless if you're going to run it yourself and grow it. I think you're realistically looking at businesses that are going to be at the 4 to 5 times earnings, even only for $500,000 or $1 million worth of EBITDA, which is not ideal. In some ways, I think it was easier back when I got started in 2018, 2019. But, I'm not here to tell you what you want to hear. I'm just here to tell you what I think is true based on, years now of experience. And I think that's what you're going to experience. So, probably means you need investment. You need equity to de-lever the acquisition. I can tell you firsthand, we've used a lot of debt over the years, and while on one end it's kept our cap table intact without being diluted, it's also slowed our growth. When you have a lot of debt, you got to service that debt before you can reinvest back into your business, and it does force you to be a bit more cautious because you're levered. So debt is a double-edged sword. So anyways, I can talk about that more if you want, as far as valuations, where I see them and where I predict them to be in the coming years and months at least. But for now, I think I'll cut the video, show a nice little shot of the bird there. And if you want, I can do a little video where I get inside it and show you the avionics in there. It's pretty sweet. Those of you who follow me on Instagram have seen the big screens that give you all kinds of information like weather and traffic and lightning, if there's lightning, which there's plenty of that here in Florida. I was dealing with that last night when I was coming back from work. But that's another time for another video. I'll talk to you soon. If you're not subscribed, subscribe, thumbs the video up, share your comments below. What do you want me to talk about next? And I will talk to you in the next one. Be good. Talk soon. Bye-bye.